Hello traders, in today's video I'm going to be talking about something that I think is quite important when it comes to trading, which is focus and specialization. A lot of the times traders who are looking for a trade, they might look at one coin and then another, and they don't really ever just focus on mastering the price action of one coin. So what I'm going to show you guys today is how we can just select one coin, how to select that coin, and then be able to trade it throughout a day. So what this assumes is that you do have the time to scalp, meaning to short-term trade, and to spend a lot of time analyzing one coin and one coin only. So let's begin with market selection because I want to keep this video short and to the point. So market selection, when I'm scalping a coin, typically I actually prefer coins that are uncorrelated to Bitcoin so that the price movements that occur are the factors that influence price movements aren't just Bitcoin moving up or down, but rather things that I can track, such as the order book, trades, and stuff like that. Not listed on many markets. I like this too because if a coin's listed on a bunch of different markets, it can be kind of hard to track when price goes up on the exchange that you're trading on with one specific coin. Price could go up because of just natural price movement on that exchange, right? Or price could also go up just because 92 other exchanges have that same coin, have that price go up. What you typically want is for the data that you're analyzing to either be the highest 24-hour volume of that coin or to have it just not listed on many markets. So basically, you're trying to limit the factors of what influences a coin. Okay? Large recent increase in 24-hour volume. I tend to like this. I don't think it needs to be talked about. So when I'm scalping, recently I've been doing a lot more spot scalping rather than futures and options. So spot, for those who don't know, doesn't use any leverage. You're just buying or selling a coin or a token. Futures and options do use leverage. They're derivatives of spot. And that means that you could be liquidated. You could potentially lose everything. Whereas in spot trading, it's quite difficult to lose everything. So newly listed as well. I don't think that needs to be said, but let's go into the more important part of what I do here. So when I'm scalping, the first thing that I want to do when I find a coin that I like, let's say I find a coin, it's not too correlated to Bitcoin, it's newly listed on a few exchanges, and I feel like I could have a good edge on this coin. I'm going to check the correlation to Bitcoin using the correlation coefficient on TradingView. I want to see on the 1-minute chart how correlated is this coin to Bitcoin. I also want to find the highest 24-hour market of that coin. What this means, guys, is if we have a coin, let's call it XYZ, and XYZ is traded on 10 different exchanges, and let's say that Binance is the exchange where that coin has the highest 24-hour volume, I want to track that Binance rate because the fact that it has the highest 24-hour volume, it probably has the largest sway over the general market, general movements of that specific coin. So you need to be able to track the highest 24-hour volume market. And then for really what you do once you find a coin that you want to scalp and you've done research on selecting a coin is just watch it. Watch the market, look at the price, look at volume. You can watch my previous videos for how to determine where price is typically going to go. But you can also learn this just by watching a coin yourself and just looking at the factors that influence it going up and down, which is how you can actively look at patterns you can take advantage of. And then I think that the other two are pretty self-explanatory. So going on beyond this, let's put this into actual action. So the past day I've been trading a coin called BICO, B-I-C-O. It was recently listed on crypto.com, Coinbase, and listed on FTX. The highest 24-hour volume rate is Coinbase, as you can see. About 1/3 of all trading on BICO is done on Coinbase. So obviously it makes sense to track the Coinbase rate. But what I did here is I tracked BICO Coinbase rate to Bitcoin correlation, and the correlation is 0.28. So that's not really too high of a correlation. For those who don't know, a correlation of 1 with the correlation coefficient means that Bitcoin and that altcoin move exactly in tandem. A correlation of -1 means they move exactly inverse. And a correlation that you can see of 0.28 means that this coin kind of follows Bitcoin, but not really. Meaning if Bitcoin rises, it will probably rise historically. But if Bitcoin falls, it will probably fall, but not. It's not like 0.8 or 0.9. Yep, and I've explained this one here. So now let's talk about the actual dynamics of what affects a coin. Why do prices of a coin go up? Why do prices of a coin go down? So I can tell you that if you look here at Bco, you can see some of my trades. This coin, over the last, I'd say day or two, has been going down a fair amount, but I've actually made a decent amount of money scalping this coin. How did I do that? If I can only buy and then sell and I can't short, and I also know that this coin's been falling over the days, how is it that I've been able to make money? Well, I've been able to make money because I've been watching the patterns of this coin. It's been pretty obvious a fair amount of the time of when it's going to rise or fall, and that's why I've been able to buy and sell at really good prices in the very short term. So let's talk about how I'm able to do that. If you look here, this is Bookmap. I don't want to talk, too much about Bookmap because that's a whole other video. But what we can see is the bid and offer. Sorry about that. The bid and offer walls on Coinbase Pro. If you look at the orange line, kind of like right above where my camera is right now, up like here, right above me, that was at about 7.95. That's called an offer wall, a large offer wall. And if you look around here, and I can actually. I'm going to minimize my video capture. Yep, perfect. So now you guys can see it. Yeah, so if you look here, what we can actually see is what is influencing price? That's the question you should always be asking yourself. And this is how you answer that question. Are uptrends, downtrends being driven more by moving bid offer walls or by aggressive market orders? Well, looking here, it seems that a fair amount of the movement was actually both, but more just aggressive market buy orders. So what does that tell you? Well, if you see what I wrote here, if you notice this kind of pattern, that typically a coin rises from aggressive market buying, this is the B that you can see, B right there, market buying into large offer walls, then typically it's best to actually scalp and buy when you notice buy pressure building up. So one tactic that I like to do is if I see that there's a large offer wall, that there's a fair amount of buying that's going into it, then I might actually buy that offer wall as well. A good example of this is what happened at 1535 at the price of 7.8. You can see that there was a large offer wall, but there was a fair amount of market buying, and then price burst through that offer wall at 7.8 and went to about 8.1 within minutes. So scalping this move actually probably wouldn't be that hard. You see a fair amount of bid walls rising, so moving bid walls higher and higher. And then you also see that large, market buys proceeding before 7.8 got filled. So this would have been a really good time to have taken the trade, probably buying 7.8 and then potentially selling at, a higher price at around 8. So the first thing that you need to look out for is, well, the first thing you really need to be able to do is to determine, order book activity and market order activity. Market order activity is pretty simple. It's just seeing, how much market buying or market selling is there happening. You can track that through Bookmap. You can track that through volume. You can track that through recent trades on the actual exchange by looking at the trades feed. You can really see how that's happening. But when we interpret, when we're interpreting, I'm gonna make this a little bit smaller so you guys can actually read that. Or actually, I'll just minimize this one again. When we're interpreting order book activity, though, what you do need to know is the difference between moving bid and offer walls and static offer and bid walls. So typically, if there's a large buy order that comes up and it's moving higher and higher, meaning it's being canceled and placed higher and higher, this is very aggressive and it tends to rise price. So I like to buy when that kind of thing happens. But if instead you see a bid wall that is not moving, a static bid wall, a static buy wall, and there's a fair amount of selling into this buy wall, typically price bursts through that bid wall and just falls lower and lower. That's a typical pattern. So you need to look out for moving versus static walls. Know that static walls are typically weak, moving walls are typically strong. So that's one thing that you can see. I also find that spoofing and market activity that might be not accurate or not as predictive isn't really as common on coins that don't have as many influences, kind of like newly listed coins like BICO or BICO or however you pronounce it. So that's the first you need to look out for. Watch the order book activity, and I need you to watch the market order activity. So here's FTX right here. You can see some of the market trades right there, and we can see the order book right here. What do we see? Well, I don't really see any large bid or offer walls that are here. I do see this one, and I want to see if it's rising or if it's static. If we see a bid wall that keeps, going higher and higher and higher, then that would probably be a sign of an uptrend. But it looks like there are lowering offer walls. If you see the pattern that's happening right here, guys, there are these mid-size offers that are being placed lower and lower. So it looks like, and then, if this keeps happening, then price will probably fall a little bit. Yeah, price will probably fall if these offers keep getting lowered and lowered. If they don't keep getting lowered and lowered, then it depends on how much market buying there is. But that is one thing that I look out for. Are the bid and offer walls static or are they moving? Right now it looks like this one moved down a little bit lower and this one moved a little bit lower. So it looks like there is some selling pressure that could cause price to fall a little bit. Now the other thing that I like to look at is, are volume spikes fueling or reversing the trend? This is super important. So are you seeing that after a significant amount of volume, does that typically lead to a reversal or a continuation? So what we see here is we see a large volume spike that led to a reversal right here, right? We see a large volume spike here, where is it? That led to a continuation. We see, I'm just going to look for more other large volume spikes. We see a large volume spike here that I would say led to a continuation sell-off. Price kept selling off. So it looks like it's kind of mixed. It looks like not all volume spikes on this asset are leading to reversals and not all are leading to continuation. But if anything, I would say more are leading toward continuation, meaning that when there's a large sell or a large buy, typically, that continues the trend. An example would be this. This is a volume spike for sure, a volume spike of buying probably, and we can see that continued the trend, a little bit higher. So that is something to take into account. And to answer that second question of, are volume spikes fueling or reversing the trend? It looks like volume spikes are tending to fuel the trend. What does that tell you? Well, that second point basically tells me that if I see a very large buy into an offer wall as price is trending higher, then probability has it that it will probably keep going higher instead of being a blow off top where it buys up and then it just sells off. Then the final thing I like to ask myself is this correlated to Bitcoin? When I look at this coin's movement, is this looking pretty similar to Bitcoin or is it not looking similar to Bitcoin? There are a lot of ways you can do this, but I use the correlation coefficient of the last 2 hours. So 120 length on a 1 minute candle, which is 2 hours. And it looks like it's getting a little bit more correlated now than it was in my picture before. It's at about 0.7, 0.6 something, 0.7-ish. So it looks like it's a little bit more correlated. When something's very correlated to Bitcoin, you really, 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 really have to watch Bitcoin. But if something is, let's say, not as correlated to Bitcoin, then what you're going to do is, again, remember my point of take the highest 24-hour volume. If a coin is not that correlated to Bitcoin, then what I actually do is this. I go to the largest 24-hour volume of that coin, which is Coinbase, and then I watch this. And then I'll basically use the trends that I see here to influence the trades that I take here. So let me repeat that point one more time. If the coin is not super correlated to Bitcoin, then it's better to look at the highest 24-hour volume market of that coin. If the coin is very, very correlated to Bitcoin, then you probably are better off just watching Bitcoin. And, if Bitcoin rises, expect the coin you're trading to rise. If Bitcoin falls, expect the coin you're trading to fall, especially if the correlation is quite large, like 0.8, 0.9, around there. So these are really the checklist that I do when I scalp. And I got to tell you that if you do these kinds of things, you're going to be far ahead of most traders, especially if you're checking correlations. Not many traders even do that in the short term, but they really should. If you're also not just checking correlation, but also checking what other exchanges are influencing this coin. And then you're also just watching and looking for patterns that you can take advantage of. I mean, this is setting you far ahead of others. And if you're using Bookmap, of course, that's setting you even higher, but you don't even have to use Bookmap. You know, you don't really have to use that. But I will say that just a little bit of watching this. I only watched this for like a minute during this video. That's why my read was probably not that good, and I didn't take a trade. But if you watch, this for a little bit, you're going to start to see the patterns of moving bid walls, moving offer walls, market buying, and you'll probably be able to take advantage of that. So with that, what I recommend is that you either message me or just screenshot this, these slides right here so that you can start scalping a coin. I do think that this is for sure one of the more profitable ways to trade and safer. You're trading spot, you're trading a coin that might not have as many other factors or influences. And you could, another big advantage of this kind of trading is that you're not competing with millions of other people. When you're trading Bitcoin, there are a lot of influences, a lot of factors, and a lot of other traders. But when you're trading a coin that not many people are trading, you can be a bigger fish in a smaller pond instead of trying to be a big fish in a big pond, which doesn't always work, of course. So these are the patterns to look out for. So go look at a newly listed coin. Go look at a coin that you think you have an edge in. Do this. Really watch it. Look for patterns, and I think you'd be surprised at how well you can really do. I could literally sit here for another hour just narrating and predicting what's going to happen. I'm curious if this right here is going to lower, if they're going to cancel this order and place it lower. If they do, price will fall, and then it'd probably be better to sell off. But if you see pressure building on this, then you probably want to buy it. So that right there is just even a little bit more of edge/alpha. Yep, so it looks like this is going to get bought up. This could actually continue the uptrend higher. If this wall falls, that amount of buying pressure will probably lead. You'll probably watch this video and see price higher than like 8 at least. If this wall falls, then price will probably be higher than 8. All right, with that, happy trading, and leave any questions in the comments below.